Well, let's get in Amnish Aggarwal, Director Institutional Research at PL Capital, who joins us on the show. Hi, Amnish. Thanks a lot for joining in. Amnish, the auto stocks, they are bracing for better times. However, the stocks have run up in the last 1 month or so since the time our Prime Minister indicated that there could be some rationalization on the GST rate. But the sales numbers are looking blockbuster just for the first day itself. Hyundai, Maruti, and that trend could continue as well. What's your view on the auto pack and what do you like?
Okay. You see, as far as your auto is concerned, I think it is a very big reset. For example, all the stuff which was at 28 coming down to 18, I think this reset is big. So, for example, tractors, they are down to just 5. And even for the bigger SUVs, or you can say the sedans above 4 meter, there has been a few percentage points reduction. This is a big positive. And the second thing is that from the last month and a half, the people were actually holding on to their purchases. Now, I would say for the immediate term, there will be, you can say, very, very strong uptick in demand. And usually what we have seen is that when such a big rationalization happens, the rub-off effect of that can actually last maybe even for the next 3 to 4 quarters. So I think the numbers will continue to be good and the auto stocks will continue to, you can say, look interesting. But having said that, there is some sort of, you can say, run-up which has already happened. So from the current level, one need to be very, very selective. Say, maybe you can say the PVs, they should do well. All the 3 front line led by, I think, M&M is, I think, one stock which has gained on all fronts. So M&M is one. Then even Maruti and Hyundai, these 2 stocks should gain. Among two-wheelers, I think TVS and Bajaj, they look interesting to us.
Look interesting means you can buy at these levels, because you also alluded to the fact that stocks have already run up. At this juncture, what can someone buy?
You see, the main thing is I would say that one needs to be very careful at the current juncture, because many of these stocks, they have risen by even 40-50% in the last couple of months, since August 15 in particular. So I would say slightly cautious at these levels. But having said that, on any declines, maybe I don't rule out, say, 5 to 10% reduction in many of these stocks, and many of them have already seen some sort of a reaction. But on lower levels, all these frontline stocks, they continue to look good to us.
Okay, so buy frontline auto stocks 5 to 10% lower in the event of a correction. Yesterday, we got a correction in many of these IT names. Hexaware down 7, Zensar down 5.5, Emphasis, LTIMindtree, Coforge sunk by close to 4.5%, Persistence or Gash of 4. Any of these stocks are buys for you?
You see, for example, if you look at, say, IT companies, whether it is, you can say, Persistent or, say, for example, Infy, some of these stocks, you can say we are having a positive view on them. But having said that, I think the yesterday's correction was more related to the reset which has happened, because for example, raising the H1B visa fees is something which is a new phenomena which has now come. And once it comes in, then there could be, say, more adjustments going forward. Will it be, you can say, a game changer that the growth rates are going to significantly go down? And that is, I would say, not the case. But having said that, it adds another bit of uncertainty to a sector where the growth itself was challenging. So to that extent, I would say at these levels, the dividend yields have become further attractive. But yes, how the entire scenario pans out, I think the sector is actually at the crossroads. But yes, whether you can say it is Persistent or some of these frontline, they now offer very good dividend yields and all. But definitely, any big run-up is not something which we are looking at.
Amnish, 4 IPOs open today. One is Seshasai Technologies, 813 crore of an issue size. Anand Rathi, 745. Solar World Energy is looking to raise 490. And Jaro Institute, 450. So busy day. But have you analyzed any of these IPOs? And do you have a subscribe or avoid rating on any?
You see, I have not personally looked at any of these, because the IPO rush is so much that it has become really, really hard to catch up with the numbers in this.